Hello, everyone. 7 Investing CEO Simon Erickson here, and thank you for listening to the 7 Investing Podcast. Our podcast is made possible by our subscribers, who allow us to empower you to invest in your future each and every month. In exchange, we give our subscribers exclusive access to our monthly stock market recommendations from each of our lead advisors. To support this podcast and join other 7 Investing fans in our exclusive Subscribers Forum, where we discuss the latest market moves in real time, go to 7investing.com/subscribe to subscribe to 7 Investing today. We're here to empower you to invest in your future. We are 7 Investing.
Good morning, everyone. It's Wednesday, November 29th, and I have a special guest with me today. He goes by MrNotAdvice. I found MrNotAdvice on what was a platform called Twitter, now X. And as somebody who recommended Enovix for 7 Investing, I've been scrolling through the feed, and it's kind of a cultish, meme-ish type stock, or evolved into one anyway. And so there's lots of stuff, lots of chatter about Enovix, both very hyped up, and also there's a lot of bears out there, and it's kind of, to me, I experience it as a binary world. You're either super hopped up on it, or you're really bearish, and it feels discordant to my mind. And then I came across a post by MrNotAdvice that to me seemed unusual, if only because he laid out a really clear bull case for the stock and simultaneously a really clear bear case. And to me, that's rare in the sense that here's somebody that I thought could see both sides and was trying very hard to avoid bias, calling it as he saw it, so to speak. And so I reached out to him and got invited to looked up his website, found his Discord channel, and then I've been engaging with him for several months now and really appreciating his insights. So I thought we could have a shop session where we talk about Enovix, his perspective on the company. But before we do that, MrNotAdvice, would you be willing to introduce yourself, maybe tell us a little bit about your background? Yeah, let's start there.
You bet. Thanks for inviting me. I started my career over 30 years ago, and I've had the wonderful experience of being able to work at all tiers of Wall Street firms, from penny stock to regional to what I would call blue blood firms. And throughout my career, I've also had the luxury and freedom to fill a number of different roles, from asset manager, founded and ran a quant fund, managed retail dollars and institutional dollars, and then got involved in investment banking. I've been involved in directly raising over $3.5 billion. And some of the companies are still public, Taser Corporation. I actually was involved in the first capital raise for Frontier Airlines. I think they've done 2 now. And so, I had the ability to sit down and meet with management and really, really watch and learn what makes a good company. A good company does not, or a bad company does not translate into a corollary good or bad stock. And so I think it's important to, what I learned was that there are certain things to look in when you look at management, but also there are, from a company standpoint, running a business, while all businesses are different and all businesses are in different industries, there are common factors that I watch for from a investor standpoint, as I'm constantly adjusting my probability analysis of whether this company is going to succeed or not. And I think that often, at least in my background early on, I listened to the story, and no company comes to you that wants to raise money without a good story. And I have learned the hard way, that stories are great, but there are things you can watch for that will give you a hint if the company management is executing and really going to deliver what they have promised and what they have proposed. I think there's been a paradigm shift in investing too since COVID. I think also with the explosion of information, there's so much information out there, and it's so difficult to really parse through and decide and know what is useful, what is not useful. And, right now in the investment world, I think the pendulum has swung mightily away from fundamentals. And I think it's swung more towards almost a personality investing business, a social media hype investing business. And I think at least on short-term timeframes, I've seen that with Enovix, some of the parties that got involved. I think that when you have a company like Enovix, or I know, I think when you have a company like that that has such a great story, great potential, I think it's really easy to ignore some real risks, or even missteps that they make. I
Yeah,
think
so
that's
no doubt. Yeah, so no doubt, Mr. Not Advice. We'll get to that in a little bit, but let's talk about. I heard you say two really important things straight up. That there's the story element of investing, and then there's use the word probability, and I
Mhm.
think that's what I see as a strength of yours is that don't you try to keep both in mind, and you don't exclude one in favor of the other. Is that fair?
Absolutely. I think, you know, the story of a company, I think people will translate that internally to support their bias. If the story's good, again, as I said, all stories are good. No company's going to come out and say, I think we're going to fail, or, and I look at the story as a roadmap. So when I hear a company say, we're going to do X, Y, Z, we're going to hit these benchmarks, these thresholds, I look at that as a roadmap, and then I start scoring them on it. And I think too often people forget, that they have real money invested in that company, in that stock. And you have to, I think from my perspective as, a money manager, you've got to allow zero. I mean, these are not your friends. The stock market's not your friend. The management's not your friend. And you have to be absolutely brutal in how you evaluate what they're saying and what they're doing, and then understanding what risks are involved in either adding money investment or keeping your investment in there. And a good company will will continue to develop and will continue to execute in support of the story that they're telling investors. And when they don't, I think it's really a natural, unfortunately, bias for people to ignore that and give them, almost make an excuse for the company too. And I think one very important demarcation is you don't invest in a company, you invest in a stock. And they are not always directly tied together. There are tons of companies out here that, are great companies, but their stock is not doing well, or vice versa. And I think it's important to realize that you're not, you know, this is not like supporting a sports team, where you get behind and you're super excited and all that. Your money is at risk, or our money's at risk. And I think it's important to realize there's the right time to invest in a company too, relative to what risk you want to take on. Uh,
Yeah, yeah, and that's so hard to do, especially from the retail side when all you're seeing is the story.
mhm,
So, yeah, thank you for pointing that out. Let's talk about a little bit of what the story at Enovix is. The big picture from my perspective is that the lithium battery has not been innovated upon for about 30 years now.
mhm,
And along come these tech guys who essentially rejigger the battery's architecture, and they swap out the graphite for silicon. And then they set the battery up so that all of these individual cells are stacked horizontally, and then they are connected with what they call break flow
Mhm.
technology, which the tech actually doesn't really matter from an investing standpoint. But what matters is that this break flow technology makes the battery withstand higher temperatures.
Mhm.
And it essentially makes the lithium battery safer. That's a huge, huge deal. It makes it safer and more compact, so more energy density, faster charging rate. And you add that together with what I said earlier, that it's a massive leap over the old school lithium architecture. And all of a sudden, with the dawn of AI, when we're going to need more and more and more battery juice out of all our devices, it seems like these guys are offering a product at exactly the right time to improve battery life across so many devices, right? And we're talking about cell phones and wearables, and they even have an interesting story about using their technology in electric vehicles.
Mhm.
Oh, that's a pretty compelling narrative, right? From the bird's eye view.
Yes.
Then along comes Mr. TJ Rogers, who is famous for bringing Enphase from a dollar stock up to whatever it went up to 200 per share.
Mhm.
And he sees big potential in the Enovix, but their first iteration basically runs into manufacturing difficulties. Share price collapses because there's these massive delays, or rather promise of huge ramp revenues. They fail on their delivery goals. TJ Rogers comes on board, has this live session where he's basically cleaning house, taking responsibility about all the setbacks, and then hires a brand new investing team. And on that investing team is the new CEO is Raj. What's his last name? Telluri.
Yeah, I don't know how to pronounce
Yeah.
that correctly.
It doesn't really
I
matter.
just refer to him as Raj.
Yeah, Raj. And he's a guy that comes from a lot of experience building chips, Texas Instruments, Qualcomm, Micron. So he has industry insider expertise and connections. And I think what he's saying is that making batteries from a manufacturing standpoint is simpler than making chips. Therefore, his expertise will translate well because the challenge isn't exactly as doesn't there's more leeway, I think,
Mhm.
in the way
Mhm.
he explains it. So now we're at this point where, as far as the story for Enovix goes, it's all a question about how quickly can they scale and how effectively can they manufacture these batteries. And the stock market looks at this, has been looking at this story and saying, we believe it. For the most part, it's not been the straight line, and you could fill in the shades there, but I think it's at a $2 billion market cap at the moment, whatever the number is. It's a sizable market cap, all pre-revenue. So point being, the market's buying the story. Does that sound, is there something that you want to add to that, Mr. Not Advice?
No, I think you've explained the resume of Enovix, Enovix, as well as what the potential for their products and products are looking forward.
Yeah, that's right. The potential, if you kind of want to, go really googly eyed and wild, it's kind of every product that uses battery could potentially be a customer. So we are talking about like potential customers, Qualcomm and Samsung and Apple. And I mean, that's why when you see some of these price targets, I've seen one at $100 per share, and they're pretty out there because the potential total addressable market is I think legitimately huge.
Mhm.
But that's fantasy, right? Or at least that's future fantasy. That's not yet reality. One additional point I think along the story is that they are moving their generation two production line to Malaysia,
Mhm.
where I believe the reason for that is the manufacturing connections and network and cost of operations of doing business there is that's the best. I guess that's where they'll get the best margins. And so they've lined up they've already found a manufacturing site, and they're in a deal with getting the financing to close with something called, I believe, YBS
Mhm.
is the financing operator there. But that kind of takes us to the big picture, right? Gen 2 line, we're waiting on this generational 2 line to actually start making these batteries and then scaling. And if they do, then they'll get all these big customers, then the revenues start coming in and the stock price shoots up. I think that's the big picture.
Yes.
So, Mr. Not Advice, what do you see as the bull case here that's legitimate?
I think I'm not, I'm not a silicon engineer nor a battery engineer, but I think that their tech has been tested by third party. I think the potential for the company is just enormous. I think you're right. You hit the nail on the head. Everything requires energy to run, and portability is key no matter the device. I think that they took, reminds me of early microchip days and how, there was this belief that we can't possibly fit any more computing power. And then, of course, the mechanics advanced, so they were able to do that. And I think that Enovix has the opportunity to make a quantum leap in the industry itself. From their capacity alone, the capacity increase relative to not having a physical size increase of the battery, and actually a smaller battery size in some cases, is tremendous opportunity. If you're looking at, devices out there, there's so much more taking up the inside of the real estate of your average cell phone relative to even 5 years ago, that every bit of space that you can recapture, whether it's from an additional component, let's say, once we move into more commercially available AI chips that are also in consumer phones, the power draws are going up because you have, HD video, you have everything's the user experience has increased exponentially, and that requires more power. So I think the bull story for, if we use a bull thesis, which is they have groundbreaking technology for battery storage devices, and it will be or could be a market changer. I think that's in a nutshell what the bull thesis is about it. And they've got, adding to that, they've got they have put together a strong management team. Raj, I had a discussion with he was a former market maker at a fund, and we were discussing Raj and, did he have P&L responsibility at his previous position? Because, bringing somebody in because they were senior vice president or director of a division looks good, but we want to know that they have responsibility to be profitable and that they're making cash flow and balance sheet decisions. And he did. So I think he's got the pedigree. And I think that his experience from chip manufacturing, I do support that their battery manufacturing is much less complicated than chip manufacturing. I think his industry connections should allow him, perhaps at the very least, introductions to either supply chain sources or potential customers. And I think I also like the new ad of the CFO. He seems to be exactly what I'd look for in a CFO. He is very numbers. I mean, he doesn't make a lot of comments about the story itself. He is focused on the numbers. I like that. I want people to stay in their own lane. I think some of the decisions, they have a geographical advantage, with just from a cost basis being in Malaysia. I think that could be exciting. Also, access to what I call blue chip customers, and doing business in Asia, and having that experience that Raj has doing business in Asia, I think is, adds to the bullish case. I think also their Department of Defense contract that they just executed.
Mhm.
You know, I think I look at that like a first of use trial, that is a real world application. And, the government, the US government, um, they waste money every day. But one thing that they're very good at is making sure the best tech is in the hands of the military. And
Right. When the US Army
yeah,
backs a certain battery,
they're
there's been some due diligence done there.
right.
Yeah, that's right. So it's pretty, I think the bull case is pretty compelling and obvious, like it really could, if with capitals, right? If this technology becomes adopted, the sky's the limit for the price of this stock.
Mm,
More interestingly, I think, is as I've been reading your balanced views, is the bear case. And I've seen you call out the management team for, I think I don't know if it's tongue in cheek, but you've said that they're doing one podcast too many, perhaps. Can you talk about that angle of evaluating this management team from the PR perspective?
Yeah, there is a balance between the amount of information that you want to release, but you also, you want to communicate with your shareholders. You want to communicate with the investment community and build some excitement around it. But I think that you can over communicate also. And I think that my opinion is, Raj has, and I put a lot of this at the feet of their investor relations company, which I think 2 months ago, I said they're atrocious. I don't think that the audience that Raj needs to really connect with are retail investors that are going to his fireside chats and podcasts. He needs to have institutional investors in. And, I'm looking at recent numbers and institutional transactions. They've had a slight drop in institutional ownership. And the institutions that are involved now are not positioned with size. They need a couple institutions that will come in and defend the stock. But again, and I won't go into it yet, but this is part of the bearish case too. And so I think that the management is, for whatever reason, believes that they need to communicate the same story repeatedly over the last 90 days. They really haven't said anything new in their podcasts or fireside chats. It's the same thing. And
You're of the mind, like get back to work, boys. Correct?
yeah, I made a tongue in cheek. I said, well, my gosh, where do these guys find time to work?
Mhm.
Because they're doing all these podcasts. And I think a couple of the podcasts that they did were done out of just the fact that I think Raj is a nice guy, a good guy, but I'm not hearing any new information coming out of Raj. I'm hearing the same things. And, it sort of raises up, I sort of start paying attention. I am not saying this is what's going on, but in the past, companies that have to talk about their story over and over again are doing that for a reason, because there is a lack of material news to present to the investment world. And so I'll be very excited and anticipating what comes in the next 90 days. But yeah, I'm not a fan of that. But the other side of that is, if you're always talking and you're telling every detail and every step, it's good to build anticipation.
Mm.
It's good for the investment community to wait for your next update. I think there's too much communication going on right now. And I believe in clear communication. I believe management needs to be communicating material facts, but I also believe there's a wise way to do that. And they
Yeah.
don't have one scheduled this week, which will be the first week they've missed. So
Right. Maybe they're working.
I guess. And that's the other thing. I have no doubt about the professionalism of the management. This is, people, when they invest, they make it personal. You know, if you don't agree with them, then it's a personal attack. And that's what this investing environment has become.
Mhm.
Nothing I say is personal. I have never met the man. I've never sat down and had dinner, shook his hand. And even then, it wouldn't be personal. It's all about he's the CEO and the captain of the team, and I want to see execution. So I think where I'm at with Raj and his fireside chats and all that is show me, not tell me. Show me something.
Yeah. Right. That's such a key component to staying clear of the traps set out for retail investors. So thank you for underscoring that so clearly. Let's talk about the bear case explicitly now. What are the things that worry you that undermine, well, maybe not undermine the story, but what are you seeing that goes beyond too many podcasts and fireside chats?
I think current investors that are blind to any risks forget that they have $1 billion shelf that they will raise money from. They have said they don't need to do that now, and I would support that. But any offering, especially in this market environment, is going to be dilutive to current shareholders. And when I hear the comment, well, I don't care about that because, the company will be able to overcome. Well, how? Show me the numbers. How? I think another part is they aren't releasing specific order numbers. Their medical device buy that they're going to be in this monitor. I'd like to see some hard numbers. I'd like to understand what their margins are. If you're going to tell me great news, a great story, we're going to be on the shelves of this medical device monitor. Tell me the numbers, because only with the numbers can I, and therefore, speaking as a representative, a quasi representative of the institutional side, the institutions need numbers. They're used to hearing great stories. They hear them every day. And so I think that is a risk. My biggest issue or biggest concern is twofold: lack of execution and delays. I think that people, retail is looking at this like all they're going to have to do is check a couple boxes, and all of a sudden they're going to be this incredibly performing and operate production company. They're not. There's going to be hiccups. And I think it's important to understand that, because those hiccups are not going to last a day. They're going to last, I've always used a quarter, to work out. And I've invested in tech startups. I've invested in microchip startups, okay, out of China. And so I do understand this space, but I will tell you that from a bearish standpoint, it concerns me that I believe they overpaid for Routejade by any metric. A company that's declining revenues, from 2000, and I believe it was the number I saw, 2021, the revenue's gone down 2 million. And when asked, the CFO said they were only marginally profitable. Well, marginally profitable to me is Wall Street speak for single digits, because if you were able to say as a CFO, oh, their margins are double digits, right? It leads to a whole new, much broader range of, well, what could those double digits be? It could be 10%, it could be 50%, but he said marginally. So I think they're single digits. So I was running some back of the napkin math, and, by any metric they overpaid. And then from the call, at least that I heard, is that they did so because they very much needed the packaging technology. Well, that was the first time I had heard that. And for a company that has been excellent at conveying, let's say, operational updates, that was, to me, and I give them the benefit of the doubt, but that was, to me, fairly important. We overpaid, and they never would say that, but we needed that packaging tech. The comment about, well, South Korea will open up doors to suppliers, and no, Routejade being in Korea is not going to open the door to suppliers. Raj's previous history, and even more so the Malaysian location, will open up supply chain. I think another issue would be that from a geographical footprint, they've got 4 different countries they're doing business in. And having run a company with geographically 7 locations, and it was it was in the largest state in America, in Texas, but it's a challenge. It's a challenge to get operational efficiency. And, could he do it? he's got the background and experience of running a multinational division, but this is a little bit different. And so, I mean, he's the decision maker here. He's not getting, he doesn't have anybody above him that can talk to him and offer guidance. I mean, he's making all the decisions. So I think that is, those are the risks, but the big one is execution. You know, if they don't prove, it's the same story it's been for, over a decade, right? Same story. They need to be able to scale. And it's a chicken and egg problem. Can they get a large customer, right? If they get a large customer, then they can prove they can scale, right? But they need to prove they can scale to get a large customer. And if they had a large customer right now, sure as heck, they'd be announcing it. Okay.
I wanted to ask you about that, right? Because that is my assumption. I don't know if this is intuition or I'm assuming they do have a large customer lined up, but you're right. Why not announce it? Or is that more a tactical thing?
Well, I think if they have a large customer lined up, I don't think that large customer submitted an order of size, because if listening to them, they are in the design process now, the final design process with their customers, right? So customers have, 50 different models of cell phones. And so they've got to physically design it to fit within the actual physical component of the cell phone case itself with all the other electronics. So that's fantastic. I mean, that's good news to hear, but that still leaves the question of, can they scale? And Raj, has the confidence that they will be able to scale. I take a probably more subdued a view of it and say, well, there's going to be more issues than we all assume with that scaling. But I don't, even if they've got, let's say, a Samsung, and I believe it's probably a Samsung or an LG, right? And if they have a Samsung as a customer, I think it's probably a conditional order. I think we'll start off with one phone or, one or two phones, a small unit number, and see how they do. And that for me that's great news, because then it is based upon, can the company execute? Because at the end of the day, we're investing in the company being able to operate and execute and drive profit to the bottom line. But yeah,
that's so, I think that's so on point, Mr. Not Advice. I, as a long-term, as an investor who's been investing for over 25 years, I can now name with clarity that my mistake, the one I've repeated one too many times, that's sort of shameful to admit, is that I'm too early when I get excited by the story,
Mhm.
right? There's a part of my mind that says, okay, well, the huge gains are made before everybody confirms that this is in fact the next best thing.
Right.
So there's this eagerness, right, to get ahead of everybody else. But because there are so many risks involved with the story not playing out the way we think it might, ought, should, would, coulda, woulda, right? That often things take longer. Things generally just take longer as
Right.
a rule of the universe. And correct me if I'm wrong, you could always buy after the majority of the risk is off the table, because if it is in fact true and they start scaling, then the way up is still years and years and years of stock price gains, right? And so if I'm right about your own approach, you have been both a long and a short with the stock, correct?
Correct.
And so this is what's most interesting, I think, to me and to other retail investors listening to this conversation, is that you don't have to have a binary biased view of a stock or a company to make money. So can you walk us through a little bit about your own thought process, how you managed for yourself to be both long and short at the same time?
Sure. So I'll start with, I have a saying that I use: never marry a stock, only date it. And, it's important when I look at a stock, there are two components of investing. There's the macro fundamental, which you're looking at the company and you're gauging whether their business plan, what the percent probability of them executing their business plan over Y time is. And then there's the stock, which is the reaction to either real news or perceived news or perceived information or opinion about that company. And that second part will always overshoot. People become too negative or they'll become too positive, depending on where a company is and the prices of the stock. And, I had this conversation with somebody that if Enovix, if I'm wrong right now, and they had a huge customer lined up and they're able to scale day one, okay, then how high is the stock going to go? So let's say the stock moves from 11, where it's at now, 11.24 all the way up to $20, right? If this company is everything that people think that it is, and they are truly going to transform the battery storage, the battery business, okay, paying $20 for it when a significant amount of risk has now been taken off the table is, in my mind, a wiser way to own this stock. Because if they are what they say they are, the stock's going to go beyond $100. There's going to be a buyout, okay? And it's going to be much higher. So if if you believe in their story, you believe in their technology, okay, and you believe they have the ability to execute, why not wait to have a little bit of color on the execution side, on the customer side? Because again, you're not, whether I get in, if the stock goes to $100, okay, and whether I get in at 11.25 or I get in at $20, quite frankly, it's not like I'm going to get a medal or a certificate that says, oh, I was one of the first people to get into it. There's this perception that, oh, I was in it early, and 9 times out of 10, that has not worked out well for people. And so, because they're taking on too much risk. I'm looking at this from a risk standpoint. Right now, risk is high for this company, and we just named the reasons why it's high. Potential is also high for this company. Okay. But I want to see risk come down, and I'm willing to pay a higher price for that, because if risk comes down, then the probability of a higher return goes up. So I'll pay the higher price, the entry fee, if my return probability is stronger. It is, it's all about watching this company develop their story, okay, and execute on their business plan. And so far, if we go back to September, all right, which is, I think, when they lined up the YBS, it hasn't, they made a Routejade acquisition. They still have the same challenges, the same benchmarks they need to overcome. It's always been about scaling. It's always been about scaling. Okay. The ability to scale, if you are a LG or you are a Lenovo or you are whoever it is, if they're getting into laptops, you want to know that if we give you this order, you can produce these at scale for us with no issues, right? So everything that's being done right now is prep work.
If you're not in the stock, buy a small position. This way it's on your radar. The risk reward at this moment, I think, justifies having a keen eye on it. And then, as MrNotAdvice was saying, wait till some of the risk comes down before allocating more. So what I want listeners to take away from this conversation is something that I harp on all the time. And sadly, I don't always do it for myself. It's, do as I say, not do as I do. It's incredibly, incredibly hard to not be biased as a human being, just in general. And we are almost forced to be biased as soon as we take a position in the stock, because obviously, like MrNotAdvice was saying, our money is on the line. So our mind skews that way. And to have the art and capacity and discipline to weigh the upside, but as well as the downside, obviously, but to have enough mental fortitude to be patient and to wait until the opportune moment, and to not color your judgment, be able to hold both the bull case and the bear case simultaneously, as Mr. Not Advice was just modeling, is, I believe, the way most retail investors could graduate to a tier that's higher than, which will end up proving the method by higher returns. And it's really hard to do, and it's rare. That's why when we look at the Enovix, as I was saying earlier, X feed, you have this split into bears and bulls, and they're talking past one another. And so it's refreshing, Mr. Not Advice, to hear you, I think, so measuredly approach this the way that puts the emphasis on making money as opposed to being right.
It's always better to say, I don't have enough, I don't own enough, than I own too much. And I think that, you know, if the average investor took one extra step, okay, and added to their dollar cost average, that they're going to sell average on the way up, that I think is a balanced way to be involved in a company and in a stock on a long-term basis. But they don't.
Right. And you know what, Mr. Not Advice, this is something I've been exposed to over the years as an investor. There's this split that I think is false between what I think of as long-term investors and short-term momentum traders that does not need to exist. It's not a binary world where you could only buy and hold for long-term, or you're some magical crystal ball waving short-term, magic hocus pocus guy. There's something, life ends up usually being somewhere in the middle where complexity lives. And in that gray area, there's elements from the long-term buy and hold that are correct, that provide good returns for X, Y, and Z principles. And also from the, call it, managing your position side, that does not have to do with short-term hocus pocus, but does also provides principles that help you manage your position more effectively. And I think what I see in your approach is this unbiased way of drawing from both without bias, without needing to say it's only one or the other. Does that sound fair?
Yeah, it does. The CEO is not thinking about you. The CEO is thinking about what's best for his company. Okay. And the same thing with Enovix. The CEO, we want the CEO to be focused on what's best for the company from an operational and executional standpoint. At the same time, it's our responsibility as investors, though, to not allow ourselves to be in an echo chamber and completely ignore risks, and then the ratio of risk to return. And the same people, Enovix has had some nice spikes, really nice spikes. Had one in the spring. It had one late summer, right? There were times when you could lighten up your exposure and, get back in the market, get back in the stock as it came down. And if when I hear the statement, well, I'm a long-term investor, and I ask what that really means, okay? Because people like to point to the Buffetts of the world or the Peter Lynch's of the world. And yeah, they were all long-term investors, but they also took advantage of price spikes to take profits and price dips to add. And I do not know why retail thinks that if they sell a share of a company that they believe in, that it's somehow sacrilegious. I don't understand that.
Yeah, I mean, that's, I think, I think you do, of course you understand it. I think in layman's terms, it's the human aspect. It's, feeling that because you believe in the company and there are actual people involved, to sell a share, you're somehow being disloyal. And that's the hard part in investing. It's a confusing space in the sense that sometimes we forget that the objective is to make money.
Well, that's a great point. What are they being loyal to? The company is not paying them for their loyalty, right?
Right. Exactly. Yeah.
The company is not going to say, oh, well, Mr. NotAdvice was in this, so we're going to let him sit in the front of the annual meeting or whatever. The company, people's loyalty is not to the company. It's not to the management. People's loyalty should be to the money that they work for, that they're putting into that company's stock. That's where their first loyalty should be.
I think that's a great place to end this conversation. And I have a intuition, Mr. Not Advice, that we'll have many more of these about different companies because I just find really refreshing that balanced approach that you have. And I think so many people can learn from that it's not a mutually exclusive world. So to that end, would you mind helping listeners find you?
Sure. I'm on Twitter at Mr. Not Advice. I also have a website, MrNotAdvice.com. I've got a tremendous amount of free material that you can read, a lot of commentary about Enovix, newsletter and posts. I want to say I'm a fan of their tech. I hope they make it. And I really do. But and I think your listeners will find that if they visit the site, they'll see that, ultimately that I am not this bear and want to see them fail. I don't. That's not my nature. But yeah, find me on the internet at my website. I also have a Discord chat, which you can find through my Twitter profile. Again, we've got a great group of, I think, almost 200 investors in there, and many of them own Enovix. So
Right. I'm learning a lot from Mr. Not Advice in this area of the market that was unbeknownst to me. And I think it's a great complement to what we offer at 7investing.com, which is the deep fundamental research about companies. And then what you do with that is you can't be overly prepared. So, Mr. Not Advice, thank you so much for taking the time this morning.
thank you.